Welcome to Dr. P.C. Verma Economics YouTube economics class. This class is meant for those who are aspiring for UPSC, IAS, allied services of UPSC, Indian Economic Service, IES, and State Civil Services. If you have opted economics as optional paper, it's well and good. Otherwise, for general knowledge, general studies, economics occupies 30%, 25 to 30% objective questions in PT and in men's general studies paper. So economics has become most important subject nowadays in arts faculty. And you know that from 1969, economics is considered to be science, and therefore in Andhra Pradesh, BSc in economics, MSc in economics. In Kolkata University also BSc, MSc in economics. In most of the universities, economics is treated as science subject because of use of mathematics, differentiation, integrations, matrices, vector to analyze the economic variables. You must be knowing competition, perfect competition, pure competition, monopolistic competition in microeconomics. And in public finance, Richard Musgrave has a detailed principle of public finance. It is considered to be Bible of public finance. You must read the original book of Richard Musgrave, Theory of Public Finance. Tax competition is related to public finance section of the economics in general. And therefore, tax competition is nowadays occupies important place. Today we will discuss views of Philip Jensel and Peter Schwartz. We all know that tax competition refers to a strategic tax setting in a non-cooperative game between jurisdictions, whether countries or states or provinces within a federation, with each setting some parameters of its tax system in relation to the taxes set by others. So this is very clear that in public finance, tax competition occupies important place. Tax competition occupies important place. And tax competition refers to a strategic tax setting. A strategic tax setting in a non-cooperative game. It means there is no cooperation between two nations, two states with regard to the tax imposition. So in a non-cooperative game between jurisdictions, whether countries or states or provinces within a federation, with each setting some parameters of its tax system in relation to the taxes set by the other country. So it is the most important topic, and we are discussing it. Tax competition, a form of regulatory tax competition, a form of regulatory competition. Tax competition, a form of regulatory competition exists when governments use reductions in fiscal burden to encourage the inflow of productive resources or to discourage the exodus of those resources. So it is easier to now understand tax competition. Tax competition, a form of regulatory competition, exists when governments use reduction in fiscal burdens to encourage the inflow of productive resources or to discourage the exodus of those resources. We all know that tax is very important nowadays. You might be seeing Kaun Banega Crorepati, and they are getting prizes after winning, answering the questions. So when prize amount exceeds rupees 10,000, the winner in India is given the amount after deducting TDS, tax deduction. Tax deduction at source. Tax deduction at source. TDS at the applicable rate under Section 194B of Income Tax Act. A flat rate of 30% is applicable on income generated by the sources, that is games, game shows, and contests. You might be thinking about computation of income. What is computation of income? Computation of income is a systematic presentation of all gains, exemptions, rebates, relief, reduction, and the computation of taxes in connection with the calculation of taxes. There is no standard format for this. It is calculated for this purpose of paying tax. One interesting thing says that what is competition? There is a remarkable line that competition examples include trees growing taller to compete for sunlight. Different trees are in forest. You will see that they are competing among themselves to become taller, to compete for sunlight. And two birds fighting over a worm. There is single worm, and two birds are fighting to eat it. Which will gain? So this is a classical example of putting competition. As an example include trees growing taller to compete for sunlight, and two birds fighting over a worm. Tax competition a form of regulatory competition. Regulatory competition exists when governments use reductions, reductions in fiscal burden, fiscal burdens, to encourage the inflow of productive resources productive resources or to discourage the exodus of those resources. Computation of income is a systematic is a systematic computation of income is a systematic presentation presentation of all gains of all gains exemptions rebate reliefs reductions and the computation the computation of taxes in connection with the calculation of taxes. There is no standard format. Standard format format for this. When price amount exceeds rupees 10,000, the winner in India is given the amount after deducting TDS, tax deduction, at source. Tax deduction at source at applicable rate under section 194B of Income Tax Act. A flat rate of 30% is applicable on income, 30% applicable on income generated from these sources. For example, game shows, contests, 30% is applicable on income. Applicable income generated flat rate of 30%. Flat rate of 30% applicable on income generated from these sources. Game shows, contests, etc. Sometimes we talk about competition. We always think that competition means perfect competition, pure competition, monopolistic competition, microeconomics. But in public finance, there is also competition, that is tax competition. And above all, there is an interesting line about the competition. competition examples includes trees growing taller to compete for sunlight. In a forest area, there is a natural competition among trees. Very interesting line. Competition, this is neither microeconomics nor public finance. This is a natural that competition in examples includes trees growing taller to compete for sunlight, and two birds fighting over a worm. There is only one worm and two birds are fighting over a worm. Likewise, in public finance, there is a term, tax competition. Tax competition and tax avoidance. These are the two important aspects in public finance, especially in taxation. And today I am discussing tax competition. Tax competition today, which we are discussing, are the views of Philip Jensel and Peter Schwartz. He has developed a model, and we will go forward for that also. But at present, what he said, that in relation to the tax competition, there are three steps in the different literature written on tax competition. So, Philip Jensel and Peter Schwartz said that if you want to know about tax competition, you must know first three steps with regard to the tax competition literature found in the world as a whole and different countries, developed countries, American economy, British economy, Australian economy, European Union economy. And therefore, it is very interesting to read out the tax competition may be reviewed in three steps. The first step is to look at the baseline model of tax competition on which most of the literature implicitly or explicitly builds. The key feature is that government in a context of open borders will engage in wasteful competition for mobile economic assets and activities through tax reduction. So first step is related to the open border. The border is not sealed. For example, in India, they can go to Nepal. In several places in India, which is the boundary of Nepal, those who are living near the boundary, they feel that Nepal is just like India. And currency of Indian currency is also used there. So the first step tax competition may be reviewed in three steps. The first step is to look at the baseline. At the baseline, at the baseline model of tax competition, of tax competition, on which most of the literature implicitly implicitly or explicitly builds the key feature is that government 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 in a context of open open borders open borders will engage in wasteful competition for mobile Mobile means movement of the assets from India to Nepal and Nepal to India. This all that asset is known as mobile, not mobile your mobile phone. For mobile, economic assets and activities. Activities through tax deduction. Through tax deductions. The second step is to focus. Focus. Check all it. Focus more closely on tax induced cross border cross border mobility. Do taxpayers actually actually shift assets and activities across border across borders in response to differences differences in taxation. The main message the main message of this literature is that the scope the scope for tax arbitrage depends crucially on the legal rules governing the taxation of cross border activities and and that the intensity of tax arbi- arbitrage varies greatly across different taxes. Third step is to analyze government reactions. Government reactions to tax arbitrage. Tax arbitrage. Do they engage in competitive competitive tax cutting? Tax cutting as predicted by the baseline model. Literature discusses various strategies of tax competition. Tax competition. Tax competition and demonstrates that different degrees different degrees across different taxes across different taxes. It also shows it also shows however that that governments governments government increasingly engage in tax cooperation. Tax cooperation to rein in tax arbitrage. Arbitrage and competition. While off to slow, off to slow start. In 1960s, tax cooperation has gained momentum, has gained momentum. In recent years. Especially after financial crisis in 2008. Thus, we come to the conclusion that if we want to discuss tax competition, views of Philip Jensel and Peter Schwarz is very much clear that tax competition may be reviewed in three steps. First step to look at the baseline model of the tax competition on which most of the literature implicitly or explicitly builds. The second step is to focus more closely on tax-induced cross-border mobility. And finally, the third step is to analyze government reactions to arbitrage. Government increasingly engage in tax cooperation to rein in the tax arbitrage and competition. While off to slow start in 1960s, tax cooperation has gained momentum in recent years, especially after the financial crisis in 2008. So this is the end of the 3 steps, and you should find out keywords: economic integration, taxation, international competition, cooperation, multinational firm, equity and efficiency, in order to wide discussion on the topic. There is JEL classification like H2 taxation, subsidies and revenue, F42 international policy, coordination and transmission, H87 international fiscal issue. All these are related to tax, competition, its issues and its solutions. Thank you for watching this video. Like it, subscribe it, tell your friends to join this Dr. P.C. Verma Economics YouTube channel, so that you will compete and you will get material for your notes preparation for UPSC mains, RBI mains examination, and it will make you sufficient knowledge to face interview, especially on economic terminology. Thank you very much.